I have some great news, and I always like to go to the experts when they start talking about the funding for sure. So I went to my friend Dan Pace at First Financial, and he's here with us. Thanks for joining us, Dan.
Thank you, Lisa. Always a pleasure.
So Dan called me and said, okay, I have something for some of those bigger loans that we've been doing together that I think everybody's going to find interesting. And he started going into no interest for 9 months and savings and lines of credit. And I said, okay, you have to tell them, right? So I'm going to share my screen, but Dan, kind of take it away. What's going on? What are you doing? And these are for my bigger loans. These are the guys that are trying to build up a bigger territory, want to start with a couple of trucks, right?
Yes, exactly. All right. Thank you, Lisa. I'm going to go over it quickly. We have done some research lately, and with SBA's backing, taking a look at different things. And we've decided, everybody understands interest rates are a little higher. They are not historically at the highest they've ever been, but they're a little high. We're trying to help and combat and get people off that fence who are trying to make a decision. Do I want this franchise? We're trying to help the consultants. We're trying to help the franchisor, and in turn trying to help us because we earn our money from loans. So what we've done is we've taken our dream loan product. That's the $250K to $350,000. And we've put a program together that I believe will help people get off that fence. It's designed for franchise startups. And 90% of the business that we get are startups. Don't get me wrong, there's a lot of acquisitions. Today is about startups. 2 weeks from now, we'll have an acquisition talk. We're making changes to that model as well. Now,
just to remind you guys that are watching, so startups meaning the franchisor has experience, the franchisor has other people in the system. They're not starting up, but in your market, you are launching the business from scratch. This is not a resale. There's not existing staff, existing equipment. Resale is another conversation. When he's referring to a startup, he's saying you're starting this from scratch. You're going to get trained, launch that business, stand it up, start making money, hopefully.
yes. So I apologize.
Oh, that's okay.
I think everybody realizes what startup is, and I forget that it doesn't. I've been doing it a long time. Okay, so yes, Lisa is correct. Your franchisor will be there for you. So what we've done is their variable rates. Right now, everybody wants variable rates because rates are higher, and we know they're going to go down. So
Right.
variable, if it goes up, you get it up. If it goes down, you get the downtrend of it. So we've been sticking to that model.
Okay.
What's interesting with this is when we close your loan, you move forward, you get your franchise, you pay for your franchise, you go through your training, we have you approved, and we're ready to close your loan. We are going to give you 9 months of interest only. So what that means to you is it's amazing. We've never done it before. I don't think anybody's really ever done it. There's a couple franchises out there that maybe do it themselves, but most banks don't do this. And the premise behind it is to give you time to cash flow this business. 9 months of interest only. So if you have a loan that's $250,000, it funds your first 9 months, you will only be paying interest only on that $250,000.
I love that. It really just gives them a running start.
Oh,
Let's start because they're not going to make money day one, month one. They need to build that up. And so it gives them a little bit of breathing room without that pressure of that heavy payment. So that's very cool, Dan.
yes, and it saves a substantial amount of money. So remember, we're writing these loans for a 10-year period.
Right.
But we're going to give you 9 months of interest only. So you got 111 of principal and interest payments. But what makes it even more unique, and I don't always follow the flyers, guys, so I apologize.
That's okay.
I've been doing this a long time. But what makes this unique is it's a 10-year term note with no prepayment penalty. So let's say at month 12, you're making a lot of money. You can pay off that note and we minus all the rest of the interest, and you're free and clear. So what does that mean to you? For 9 months, you've just paid interest only, and maybe you paid principal plus interest for 3 months.
Right. And that's huge. I mean, I tell people that all the time. Use Dan's money. Use other people's money. Stand this up. You can always pay it back early. It's okay, but give yourself a solid start. So
I agree. And we've done it even to where you can make principal payments down the road if you want, and we can minus the interest. But this is really unique in that point. So we're giving you the time to cash flow positive. That's it. And hopefully within 9 months, you should be cash flow positive. I don't know if you're even breaking even. That's still a wonderful thing. And that's going to give you and save you thousands and thousands of dollars of principal payments. We have calculated it out, but because we don't know the actual loan amounts as we're doing it, it's going to save you a substantial amount of money, which I will talk to each and every client about when we get to that point if they need it. Now,
talk a little bit about this part. I like this part too.
Which
one? The line of credit. That's a big deal.
Anybody who gets approved for 350, from 250 to 350 is going to get an additional $25,000 line of credit. It is basically a line of credit that you can draw from during the course of you having your business. We will look at increasing those lines as your business goes down the road.
Sure.
But in the beginning, for this size of loan, that 25 to 30 or to 250 to 350,000, the 25K line of credit is there for you. You do not have to take it if you choose not to. If you would like to, you would let the closer know.
Okay.
And they would put that in place for you. Okay.
Got
So
it.
when you look at all these things, now, here's the biggest factor about this loan. All these things are wonderful. Don't get me wrong. I'm excited about them myself. I couldn't sleep the last 2 nights thinking about different ways to get out there and educate people how to do these. But what makes this product even more successful is the fact that it's a non-collateralized loan.
Explain that a little bit for someone who
that's
big.
Confused. We will ask you to personally guarantee these loans, but it is what we call off the balance sheet accounting. Even though you're guaranteeing it, it never appears on your personal credit as a loan. It is a loan to the business entity that you choose to structure with your accountant. I don't care if it's a sub S, sub C, LLC. That's who we're physically loaning the money to. So it never hampers you as an individual client to go out and get a home, get cars, get credit cards, whatever you want, because nobody ever sees this. The only thing, if it's done properly, anybody's going to see is one inquiry to either Experian or Equifax. That's it. So by that, what I mean when I say that, that's the first part. The second is we're not looking to put a lien on your home. I don't care if you own it outright, have a mortgage, but there's equity. These loans do not require a lien. So anything up to that 350 mark, you're guaranteeing it. We're going to put a lien on the business assets, obviously, because we're financing that for you. But other than that, there is nothing else there. So when you put all of these things together, 9 months of interest only. You're not putting up any collateral. It's off the balance sheet accounting. You're getting into this loan with 20% down minus your franchise fee. So if a franchise fee, I'm just picking a number. If it's 50 and we want $60,000 down, you've already given us the 50 because you gave it to the franchisor. We count that as if it's the money that you gave to us. So you're getting in for substantially, not a lot of money, to be honest, to start your own business. And
talk a little bit to him, Dan, just because I'm sure that I'm going to get a million questions. What are the qualifiers for this type of loan? I mean, they're, I think, pretty standard. It kind of rolls off my tongue now, but let's just give it to them.
When they're non-collateralized, we tend to look a little bit more at the individual person.
Okay.
we want to know that their credit's okay. I'm not telling you got to be an 800, a 750, a 725, but you gotta have maintained your credit history over a period of time.
Okay.
You might have a late payment here or there. I understand that. There's always something that we can explain. But if you have, let's just
700-ish.
credit, okay? Nowadays, good credit is 690 and above.
Okay.
That's what they consider good credit.
Okay.
And as you go higher, you're better. Now, is it easier to acquire a loan if you're a 750 credit score or an 800 compared to a 700? Or yeah, sure it is. But realistically speaking, there's a group of factors that we take into place when we're looking at these. I like to see, if there is outside income, if it's a husband and wife, is the spouse working? Is one keeping their job? So I don't have to worry about debt servicing their personal income as well as the business. Does it make it a lot easier to know that that's being done? Sure, because then I only have to look at the business and say, okay, let's project how this business is going to make money, knowing that they have 9 months of interest only.
Right. Got it.
Really,
let me just touch on the slide behind it. I know we're kind of running out of time, but the fact that it doesn't have to stop at 350, like you'll go higher, right? So.
Okay. So now we're going to go to the 350 up to $1 million. Remember, we go up to 5 million, but this program only goes up to $1 million.
Okay.
Once again, credit is the same. It's the variable rate is the same. 9 months of interest only. It's the same. It's 9 months. The only difference we're going to find on these loans is there's probably going to be a franchise that you have to do build out. In other words, you have to construct the building that you're going to be leasing. The interest only is much different when it's that, because you're only paying interest only on the money that's borrowed at that time. So, but that, once again, I will explain. It's capped at Wall Street Prime plus 2.75. Once again, 10-year term, fully amortized, no prepayment penalty. The difference here is on my bigger ticket, I like to get less money down. I'm normally in that 15% range, but a lot of times, depending on the franchise and how the franchisor itself, they perform, is what kind of justifies that for me. But it's all in there for the same. The personal guarantees are the same. The only thing different when you start getting over that certain amount, the SBA has a requirement. And that requirement, it says, if you go over $350,000, we're required to look for outside collateral. Now, all banks are different. My particular bank, collateral to us means real estate. And if you own a home and have a second, first mortgage, and you have more than 25% equity available at home or other property you have, we are required to put a lien on it. That's the only collateral we look at. If you don't have it, you don't have it. That doesn't mean you can't get a loan. We just have to follow the SOP guidelines. And that's what it says. We do not take people's stocks, bonds as collateral. I don't want your antique cars. I don't want your artwork. And I definitely don't want your children. I got enough. So, but with that being said, it's the same thing. They close within 60 business days. They both mirror each other. But the best part, once again, is the 9 months.
Okay. And that's what I wanted to talk about. Just again, I know we're kind of out of time, but these don't take a long time. I mean, 2 months to close, and you can talk to them, get them started, have a good understanding of we'll be able to do this for you, right? I mean, you have eyes on these size loans.
Qualify them within 2 hours. If they send me the information from there, I'll issue them a letter of interest. And that's when they engage back to you or the consultant and pay their franchise fee, and we get started. And the fun starts, as I like to say.
Yeah, absolutely. Well, Dan, thank you so much. I mean, this is a big deal. Like you said, it hasn't happened before. You've heard me say it a million times. And if you've worked with me, you've heard me say it a million times, use other people's money in the beginning, set this business up, give yourself a chance for success, give yourself breathing room, and you've kind of packaged it all together. So thank you. I mean, I think it's really going to help a lot of people that maybe were a little bit afraid or didn't want to be looking at that big payment right out of the gate before they're making money. This really it kind of puts the ball in their court. I'm going to say, clock's ticking. You got 9 months to start making enough money, right? So.
That's it. It does put it in the client's hands now. It's a good thing for everybody. And I'll go in more depth with each client, but this gives them an idea and gives everybody an idea of what's out there now.
Perfect. Well, thank you so much. We'll talk to you again on whatever next is coming up. You always seem to have your thumb on the pulse for me.
You got it. I'll have another one ready for you in a few weeks.